Peter, it's exciting to have you here at Silverfest too. I know the last time you were on the show, we were talking about putting some numbers behind, rather than just saying silver is manipulated, the dollar is hyperinflated, which are also true. But whether we get the exact number or not, coming up with some sort of framework so people can put their own assumptions, but at least have some thoughts of how you guys might approach it. Well, hello there, my silver Arcadian friends. Chris Marcus here with you for Arcadia Economics. And tonight a video I'm really excited to share because back at Silverfest 2, geez, already a couple months ago, one of the topics we had a panel about is how much is an ounce of silver actually worth? Obviously, myself as well as others on the channel talk a lot about how we think the price is far lower than it would be in any sort of freely traded market. Yet, all right, so silver is going to go higher, but much higher. And rather than even thinking of, is this person's exact answer correct? What I loved about this panel is that you heard a bunch of different experts explain a framework, how they would go about thinking about it. So these now you can look at their answers, but also think about how you might value it based on your own assumptions. So with that said, if you've ever wondered how much an ounce of silver is actually worth, well, here you go. Well, hello there, my friends. Chris Marcus back with you at Silverfest 2, where it is heating up in the afternoon here in Mexico on the silver capital of the entire planet. Before we go further, James Anderson, Bill Holter, Peter Krauth, are we all in agreement Mexico is silver capital of the planet?
Hands down.
And are we all in agreement that based on the current known knowledge, gold could be great, but if gold is great, the probabilities would indicate that when you know the full information, which we can dig into in this panel, about how much is an ounce of silver actually worth, if you took an equivalent dollar amount, say $10,000, and you put it in gold, you put another $10,000 in silver, Bill, 20 years from now, which pile would be worth more in dollar terms? Uh-oh, David Morgan's coming in, a little pressure on.
They'll both be worth infinity. In dollar terms, you said.
No, I asked which would be
No, you said in dollar terms. They would both be worth infinity. If the dollar goes to zero, a cup of coffee is infinity.
All right, Yara, young whippersnapper, correct. Let's get 2 ounces for Bill. He is correct. These are the kind of things.
Silver, however, silver will be gold on steroids.
Of course. 3 ounces for Bill. Bill Holter of JS Mindset, partner of Mr. Gold, Jim Sinclair. I don't know, Bill, does that make you Mr. Silver? Welcome on in, sir. How are you today?
Thank you. Glad to be here.
Bill's he's got a second delay there, but he was crushing it on the main stage yesterday. So, Bill, great to have you back here today. James Anderson, legend of SD Bullion. As David Morgan and Chris Marchese are getting logged in, how are you, my friend?
Doing well. Good to see you. Great to be here.
And Peter Krauth, great to have you back. A regular guest on the show these days. And Peter, it's exciting to have you here at Silverfest 2. I know the last time you were on the show, we were talking about putting some numbers behind, rather than just saying silver is manipulated, the dollar is hyperinflated, which are also true. But whether we get the exact number or not, coming up with some sort of framework so people can put their own assumptions, but at least have some thoughts of how you guys might approach it. So Peter, of Silver Stock Investor, Gold Resource Investor, and where do we find those again, Peter?
silverstockinvestor.com and goldresourceinvestor.com.
All right. And Peter, great to have you here. How are you doing today? Well,
I'm having a great time. Happy to be here.
All right. Well, it's great to have all three here. Guys and ladies at home, get those questions coming. I mean, these are your chance to ask these world-class experts, in my opinion. I'm going to leave the framework, and then, James, you moderate. Yep. I'm going to go enjoy this one from the pool myself. But at least when I think of if I knew the numbers, how I would approach this. Before this thing, the dollar came along, people were using gold and silver as money. Bill, is that correct?
You're absolutely right.
Well, if gold and silver were money before a dollar was invented, and under the original system we were sold, it's like, all right, hey, rather than lugging our gold nuggets around, we'll have a set amount of these dollars. We won't have people like Jamie Dimon, whoever, print more at random. So this is stable. Gold supply, we mine some more, but it's going to be roughly stable. We'll keep it in check. Not so far, so good. Peter Krauth?
Agreed.
So if we actually knew, if that's the definition of a dollar, then it's a simple fraction. You have X number of ounces of gold, and then you have X dollars. You just divide the two, and assuming that the government isn't lying to their own constituents and committing felony after felony like we know that they do, but assuming in a more Arcadian world, it would just be simple math. Are you with me so far, James?
Yeah.
So if we knew the numbers now, how many dollars are out there? Bill Holter, do you think the Fed is actually telling us the real amount of dollars they print?
No, and we have no idea how much gold we actually have because there's not been an audit since the 1950s. But a dollar was truly defined, I believe, as 371 grains of silver.
Yeah.
That was the original definition of the dollar.
The actual word dollar comes from the coin thaler, which was a silver coin.
That's right.
So that is exactly
right.
Silver and dollar are synonymous.
So perhaps if we take that a step further, we at least have the beginning of a framework. Maybe we don't know those exact numbers, but at least that's the beginning of a thought process. Then we can make estimates. If there are this many dollars and there's this much gold, we don't know exactly, but at least now we have a formula that we can plug our inputs into and begin to create a scenario analysis like we might look at it in option trading land. Chris Marchese, welcome to the party. How are you doing today, sir?
Oh, pretty good. David's here. He's trying to log in.
No problem.
So
how fortunate to calculate this stuff. The Silver Guru is joining us momentarily. Thank you, Chris Marchese. Great to have you here from silverseek.com and goldseek.com. And what is the other one where they actually can see your trades?
Gold Seeker, but we're actually moving that to Gold Seek, so it's an open source model portfolio.
Open source. You can't get that kind of transparency out of Ross Benham and the Fed. Bill, I won't make a comment on that. Don't say anything yet. James, I'm going to pass the silver bar over to you.
Okay.
Can you, you give away at least 10 ounces of silver during this panel? And B, now that we have a framework established, we have a general formula. Feel free to break the formula, adjust additional variables. I see Peter's ready to help. But if we had some approximation for evaluation of gold, then we could say maybe one value silver based.
The only question then becomes, what's the gold silver ratio going to spike to? And where are we going with
James, lead the conversation. Have fun. I'm going to go enjoy from the pool this beautiful Silver Fest. How grateful. David Morgan will come in for any answers that obviously I wouldn't know.
Hey, Chris, thanks for putting this on, by the way. We love you.
Thank you guys for being here. James just promised, show the love. Just pick out the silver. All you have to do is write down the names, buddy.
Yeah, I will.
Bill Holter, you're up to 4 ounces. I'm going to make a note of that now. I'll check back in on you guys, okay?
Cool.
All right, guys. So I think the basically right on, but there's so much stuff on it won't really work for that well for a list writing piece of paper. So we have to set up the parameter knowing that where this may go, and obviously the discussion becomes a combination of what's the Fiat Federal Reserve note nominal price spike high, and then what in true terms of real value could it go to in an absolute mania to the upside, because Lord knows we've been sitting in a depressionary suppression for centuries. Essentially, if you go back and look at history, there's only been a couple of times where we almost got to see a free market price of silver actually hit. So let's kick it over to David. First of all, thank you for coming. Sorry, there's a little bit of technical difficulties there, but let's get into it. I'm sure you've been asked this question many a time, so go ahead.
Okay, well, thank you, James, and thanks, everyone. I admire all of you, as you probably know. And also, it's really nice to have some support. It was like me and Ted Butler in the very beginning. There wasn't much else. And anyway, so I'm going to try to be succinct, James, but there's several ways to look at it. One of the easiest ways is one of the first articles I ever did about 2003, engineering the price of gold. And what I did there was I took the base money supply divided by the amount of gold that the Treasury says we have. You want to know how many dollars per ounce is it worth? You do that arithmetic. It's a division problem. It came out $2,500 the ounce. If you did that in 1980, it came out $400 an ounce. And yet in 1980, we had a spike high of over 800, 850, 875 in the near month. Spot was 850. So that in that article, I said, well, look, in times of economic crisis, you could go back on a true gold coin standard where that's all you exchanged and have double the supply you needed. If, of course, the Treasury had what they purportedly had.
Mm-hmm.
It only lasted a day or so, but I made my point. And then I said, well, how do you figure out the price of silver? Based on what gold just did. This is all based on fact. And there you have to get into the idea of, well, since silver is quote unquote not money by the monetary authorities, what would it be? And so the easiest thing to do, I said in my article, was just divide it by the monetary ratio of 15 to 1. You come out with the silver price. Now I want to move on from there. Another way to look at it, and I think is more palatable to most people that have the ability to think, and that is, what was the standard wage? It used to be a joke. Bill may be old enough to remember this. I'm not sure, and that's a compliment, Bill. But there's a joke called "Another Day, Another Dollar," and then that column, "Another Day, Another Dollar," it was all about the topic du jour, kind of what we call a meme today. And the cartoonist was very bright and would put up stuff, that was pertinent to what was going on in the newspaper. Well, the point of that whole discussion is that was the average wage, was $1 a day. So if you take today, and I just did this for my latest speech at the Silver Symposium in Coeur d'Alene about a month ago, and I looked at it, I was actually surprised, guys. I could verify it off the internet, so I'm going to use their numbers. But the average wage in the U.S., according to Google, was 28 and change an hour. So I'll up that to 30 and do the math. On the average day was 8.8 hours, by the way. So if I take the 28 and move to 30, and I just use 8, so I can do it in my head, that's $240 a day, which would say $1 would be worth 240 in fiat. Now, remember, $1 is, I think Bill said, is 371.2 fine grains of fine silver, which is about 3/4 of an ounce. Now, if you pick up a silver eagle right now, it's 1 ounce and it says $1, which proves one thing and one thing only. The Treasury doesn't know what $1 is. I have to throw a little humor in there.
Of course.
You use that $240 as a metric for what silver is really worth on a monetary basis, which is where it's the most valuable. Remember, Johnson said we have to stop using silver in a coinage. It's too valuable. Think about that. So we could also go back to Rome, and now you're looking at, wasn't $1 a day, it was 1/10 of an ounce a day. So I'll round up the dollar to the Treasury dollar currently and make it an ounce, and I'll take a 1/10 ounce, and that would be worth $240. A 1/10 ounce, which implies $2,400 gold. So you can go anywhere between $240 and $2,400. Take your pick. I'm just giving out the ideas, but they're all based in absolute, complete, and total fact, which is where I like to start my arguments, because we could subjectively say, and Bill's absolutely correct, what's the price? Infinity. When you have a currency that's worth nothing, then the opposite's infinity. I totally agree. But we aren't there yet, and I don't think we'll get there exactly. But once the public wakes up to what's been done to them, and I think James, among all of us, I'll shout out to you, probably done the best job of all of us here, and just my opinion, of really getting the idea across to the general public of what the insidious inflationary maelstrom has done to the average working person without them even knowing about it. So I'm pretty much done. Those are my main arguments. Thanks. I'm sorry I had trouble getting in. Thank you, Yara, for giving me the link. But
no problem.
Dan, thanks for starting off with me. You know, I am passionate as hell about this. I'll say one more thing. Money is power. If we put power back into people's hands, we'll have the power. We'll have control. We'll be able to do a lot of things that we aren't doing now because we have given up our birthright of what really money is to the money masters. I'll stop there.
Great. Thank you, David. Chris, let's hear what you think. What are you thinking in terms of, ultimately, what is 1 ounce of silver value? Maybe what is it worth in various terms? Go ahead and let's hear what you think.
Well, I can tell you right now exactly what it'll be worth in US dollars, and that is infinity at some point. But I joke, but there's various ways to try and estimate it. For example, backing all U.S. bank reserves by silver, but in the past we haven't ever had a true silver or gold standard. It was always fractional.
It was a rig job.
Yep. So I would use it relative to the gold price, and I think the adoption of a gold standard is somewhere in the world is more likely than a silver standard initially. But then, then you try to assume what is a proper ratio. I don't think it's 20, 30, 40, 50, 60 to 1. I mean, it's being mined at about 8.5, 9 to 1. There's more above ground gold inventories relative to silver. I guess silver's about 4.5 billion ounces. Gold's probably 5.5 billion. So it's more scarce that way. So I would maybe just use a 10 to 1 ratio relative to gold. Although it does have that added industrial component, which could push that ratio lower.
Especially if you're trying to go intergalactor, or if you're trying to actually blow out into, Buck Rogers land, silver could become something that's very important. We never know what we're going to find out about silver, platinum, some of these precious metals. I think we're still cavemen when it comes to understanding what truly they can be used for. So.
Oh, completely. Like I learned a lot from David Morgan about, how most industrial consumption was from photography.
Right.
And, when the tech revolution came upon us, it's the best conductor of heat and electricity. So it's a technology metal. And you're right. I don't think we've even scratched the surface of what it could be used for.
Yeah.
I mean, I don't think they're trying to replace copper with silver for everything. And that's just not going to work. It's not nearly as efficient.
There's barely enough copper for what we have plans and aims to do. So good luck with the silver supply. I have a question here in the chat. Looks like someone asked, can someone ask Bill what he thinks the post reset price of gold and silver has already long ago been determined at? So he's giving off the idea that they already know what the price is going to be in a reset.
I think at one point in time in the early 2000s, there was a reset price. There was a reset number. If you go back to, I think it was 2003, 2004, you had Judy Shelton talking about $10,000 an ounce. And it included the SDR. I think we've blown way past that as far as debt terms are concerned. So I think that number is
it's 3 times
pretty much out the door. Right, it's out the door.
Right.
As far as the pricing of silver, first off, let's just use round numbers. God's ratio is 10 to 1. Silver comes out of the ground, it's slightly less than 10 to 1. Historically, the ratio was 15 to 16 to 1. So you got to ask, why was that? Why was it 15 or 16 to 1 when it came out of the ground at 10 to 1? 300 years ago, 500 years ago, 1,000 years ago, long before there was financial engineering. And the reason was silver had to be discounted because you needed a mule, you needed a horse, you needed a donkey or a carriage or something to carry 10 times as much weight. So what man did was they discounted the silver price because of the bulk. So that number of 15, 16 to 1, that stood for years and years. Now, if we look at the price of gold, and I did this calculation about 3 or 4 years ago, and it's blown out from there. But back in, I believe it was 2017, I did the math. If you took the amount of U.S. debt, and the reason I used U.S. debt was because back in 1980, when gold hit 850, at $850 an ounce, the gold that the U.S. supposedly had would have exactly balanced. It would have balanced our debt.
Right.
So if you take the debt that we have outstanding and you divide that by the gold that we supposedly have, And I don't assume that we do have that because we've not had an audit since the 1950s. But if you take that gold and you divide it into the amount of debt outstanding, that number in 2017 was $87,000 an ounce. It's way over $100,000 an ounce now.
Right.
So if you take just use the number of 15 to 1, I mean, you know, 1/15 of what's the number now? 130, 140,000. You're approaching $10,000 an ounce.
Yeah.
Right.
Right. Yeah, that's crazy.
4-figure silver.
Yeah,
Right.
4-figure silver, exactly. High 4-figure silver at that kind of length of
Right.
state. Jeez. Wow. Peter, let's talk about this. I'm sure someone, let's say they walked into this conversation off the street and saw us 5 silver Cokes sitting here having these conversations. I mean, let's be honest, like they would think we are absolutely insane, and that, you know, we've been talking about this for how many decades now? This is never going to happen. You guys are a bunch of lame, you know, losers, dead money, whatever. So, Peter, what do you say to that?
Well, I'd tell them that they're all suffering from recency bias, right? Because, you know, a year and a half ago, who thought that we would all be in lockdowns? Teachers would have to switch from, you know, first of all, schools were shut. They'd have to switch to online learning within a couple of weeks. Mm-hmm. You'd walk out your house and streets were quiet. It was eerily quiet. And we'd be wearing masks to shop. The only things that were operating were grocery stores, healthcare, and, you know, some essential services. So I'd say that's the problem. If they think we're kooks, maybe we spend too much time looking at this stuff. Maybe they don't spend enough. Yeah. Right. And so I think that's, you know, that's the answer to that. We spend so much time, and I think, yeah, you could maybe argue maybe we spend too much time, but these are our jobs, and we were trying to understand this as well as we can. And you know, numbers like $5,000 gold, $10,000 gold don't sound or look so ridiculous anymore. No. Gold's at nearly 2,000. It was last August. Mm-hmm. Back in 2016, there was an interesting article. It was Jim Rickards who had made his own calculation based on M1 money supply. And he said if you backed with 40%, which was what we had in the past, the M1 money supply, and this is back in 2016, you were at $10,000 gold. Right. I've been saying for a decade, $5,000 is a realistic target. So if you go from 5,000 and you use what I think again is, you know, again, a realistic ratio, we've thrown it around a couple of times in the last 20 minutes, 15 to 1, which is where we got in 1980. You have $300 silver. That's my realistic target.
Peter, the one thing David often says, and I've heard him say it, is that 90% of the gains happen in the last portion of the time when you start going up an exponential wall, whether it's politically reset or whether it is the actual free market just stomping the crap out of the shorts and people getting seriously scared because the fiat currency has no value storage anymore. It literally is just leaking like crazy, and they just go running to real things, and that is hyperinflation by definition, right? And so, David, I mean, let's talk to that. I mean, like, obviously gold's going to probably front run a little bit in terms of value gains, and then silver later usually does that kind of lag and then blows right past gold in terms of performance. I mean, here we are at 70s, mid 70s gold silver ratio. Next year, probably going back toward the 50s, I would think. Let's talk about how, in terms of how it ends, how these manias typically end, and how crazy it can really get.
Sure. So the 90% of the move in the last 10% of the time can be proven in the last bull market. So if you look at, and you could, it's easy to monkey with numbers, but if you start when the silver bull market started, which is when it was demonetized in 1965, even though you could cash in your silver certs through 1968, it was taken out of circulation officially in 1965. So you can go from 1965 to the peak in 1980 at $50 an ounce, round numbers. You do the math, and basically silver had a very good run up until January 1979 and basically kept you even or better with the official inflation rate. So in January of 1979, silver was sitting at an all-time high of 6 Federal Reserve notes per ounce silver. And most people won't buy a new high. In fact, a lot of people that had held for 14 years probably thought 6 was about it. Some may have cashed out. But if you're a rank speculator and knew nothing about how markets move, and you bought the all-time high in January at $6 and waited 1 year, you would have had an 800% increase in 1 year, far exceeding the 14-year amount, that rugged climb up and down, backing and filling and going up and down and finally reaching that $6 level. Right. One thing I failed to point out about this, James, and everyone listening, of course, is that after it peaked at 50, and it wasn't 1 day, so let's get clear on that, its average price for all of 1980 was $20. Now let's think about that. It hit an all-time high of 6 in January 1979, and the average price for a year was over triple that all-time high for the following year, which proves to me that silver was extremely undervalued until somebody had the, let's say, the foresight to understand how undervalued it was and started to implement their idea into physical reality, i.e. the Hunt brothers and some of the Arab sheikhs at the time. And that really shaped up the market, no pun intended. So now, if we go forward, we're going to see, I think, the same thing. As you said, James, and I agree, gold will probably take the lead because everyone's brainwashed by the banking community that gold is money and nothing else is. If you're a gold bug, which is about 0.5% of the entire financial system. But that doesn't mean that can't double or triple from there, which imagine that any stock or any commodity having 3 times the volume consistently for people wanting to get into that one investment class. Well, that will spill over into silver. Since, as Chris said, and all of us know, the silver market is so small relative to gold that the amount of silver will be bid up to, you know, I've said in that article, during the price of gold, in that article, I said 1/10, okay? So that goes back to the in-the-ground natural ratio that Bill pointed out. So if we get $5,000 gold, that would say $500 silver. You get $50,000 gold, well, do the math. I mean, it's and these are paper terms. What people don't know, sorry, James, is
it's okay.
What paper's worth. It's worth nothing. One of my favorite little clips that I save on my computer pictures is guys in Zimbabwe holding up cardboard signs with currency all over it saying starving billionaire. One of my favorite books behind me is The Penniless Billionaires. People don't get it. These currencies go to zero or effectively zero. And when you are in Venezuela and you have some silver jewelry, it doesn't have to be a coin, it doesn't have to be government minted. You got jewelry that's silver. Guess what? Your chances are you're going to have a lot better chance to eat than someone that doesn't have it. One last point I wanted to make on the last part about silver and what's its value. Jerome Smith pointed this out, so I'll give him credit. But silver is price inelastic on the demand side for industry. Well, that's an economist way of saying what? It says that in industry, when I buy a cell phone that costs me $1,000 and I've got $2 worth of silver, I am not going to quit manufacturing that phone because silver goes to 200 an ounce or even 2,000 an ounce, because it is such an infinitesimally small part of my monetary layout for the end product. It really doesn't matter what the price is. That's inelastic demand. That means I have to have silver to produce the product, and I don't give a fig what the price is because it doesn't affect the material price of my refrigerator, my smartphone, my flat screen TV, almost any industrial application uses a minuscule amount of silver. So the demand there is, as Bill said, infinite. You're going to have it because without it, you are out of business. And that's another way to look at it. So I wanted to fit that in as well. So
it's true. And by the way, you know, if it does add a bit of cost, it'll just be passed on to the consumer and just add to the inflation pile. So be it. So Christopher, let's talk about in terms of when you got in this market, where was silver? What price?
$9.
$9. And when you look out on the future and the horizon, no one's putting a gun to your head to tell you when. But where do you see this thing going to, like, the absolute mania phase where it gets so stupid that you're almost sickened by who comes and shows up, like the Johnny come latelys into this market.
Yeah, well, I'll expand on what David said. He outlined what happened during the 70s.
Go for it.
And 1980 was just an incredible year in terms of the peaks in gold and silver. But, back then, the U.S. they didn't have the structural issues, and they were able to raise interest rates to curb inflation. Additionally, that was mostly confined to the U.S. I mean, and this time it's a global problem. All major world economies have these just absurd debt loads that are just ever growing, and they're spending more and more money that they don't have. Inflation is everywhere now. I mean, I think Canada reported 4.4%, which probably is more like 10%. I'm sure.
Unsafe for baby boomers, or their promises are coming delivered this decade and the next. Well, how are you going to deliver those when you never save for them? Sounds like big time inflation.
Yeah. But then the real question is, how do you get out during the mania phase? And personally, I wouldn't go back to fiat currency.
No, of course not.
And it would have to be other commodities that are
real assets.
Yeah. So that's how I view the mania, but I think it's just going to be absolutely out of control. I mean, imagine it on a global basis. And David said silver is a small market. Even gold's a small market. I think they account for combined less than 2% of global financial assets. They should be more than that, obviously. I mean, if they just went to 3%, that would cause the prices to skyrocket.
In terms of history, Bill, or anyone else in the panel, obviously 1980 was a pretty high value for silver, but there's been higher times when silver's got probably more goods and services, depending on where you were in the world. For instance, for an example, silver, if people don't know out there, is literally the money that was used for globalization and trade. As soon as we finally figured out that you could take a boat from the Philippines to Mexico and not die on the trip, then all of a sudden silver became a huge export to China, and people in Mexico City were rocking Chinese silk. Okay, and this was like 1600s. This is before the U.S. even came around. So, obviously in China, if you had silver, you probably could have bought a lot more than you could have done in 1980 in terms of goods and services with 1 troy ounce of silver. So maybe anyone on the panel know of a crazier mania that's happened in silver. Speak on up. I mean, I like, just for instance, David, I've been in this industry for long enough. You've probably seen the chart before. There's like this incredible 500,000 year chart that shows you history in terms of what it could buy and shows silver. And, it goes down when they start controlling the price toward the last century or two. But back in like the Middle Ages and such, silver could buy you an arm and a leg.
Yeah. Well, I'll speak up. I was going to look for it first, James, and I can't do it by memory, but there is a chart that came out in Forbes magazine after Warren Buffett announced his purchase of silver. And it showed the inflation-adjusted price of silver from, I think, the 13th century until he bought.
That's the one.
And that's the one. And I forget the price, but it was, I know because I've lectured on it. I know that for centuries, it was $200 an ounce. Now, that's $200 in today's,
2000s price, because that chart was from 2000.
Correct.
Right.
Correct. Thank you.
Yep.
But, so there's that. And then it was much higher than that, but it was, fairly briefly. And I don't know what drove it. Maybe just, global, trade or whatever. But the point is that, and then once it was demonetized, well, before it was demonetized, it dropped to 70. But still 70 in 2000, when we were looking at, $5. I mean, Buffett bought most of silver under $5. So, 5 goes into 70, 7 times. So there's that 8-fold increase type of thing. Anyway, you got the idea. What was the driver? I don't know. But what I do know is from that historical chart, silver was at the all-time inflation-adjusted low of all time. That's when Buffett bought.
Wow.
And on top of that, if you go to the mean of that chart from the 13th century on, you're looking in $2,000 or 2,000 year terms, 21 years ago, at roughly $100. which is again 20-fold on where we are. So, you know, I don't know. I mean, we've a massive inflation, and I'm going to digress here. I might lose some people. I don't mean to, but Chris did a study for us years ago of what was the true value of silver relative to the amount of printing. And as I just said, in 2000, Buffett caught it. Well, if you go out in time, they keep printing at a greater rate, especially this last year. So if you do the math of paper printing versus value of silver that's above ground, it actually is as good a buy now as it ever's been.
Yeah.
Just happens to have a different, you know, amount of fiat attached to it. But if you want to be gut honest, and I hope I'm not losing anybody, especially the viewing audience, you're actually better off now as far as what you're trading your paper for than you were when Buffett did it.
Yeah,
Right.
No doubt.
Hey guys,
go ahead, Bill.
One other aspect to look at is how small the silver market really is. I mean, the global production is what, 16, 17 billion dollars a year globally. Right. I mean, that's not, in today's world, that's not even a ham sandwich. That's not, when you're talking about the U.S. Treasury or the ECB or the Bank of Japan, that's like a footnote. Mm-hmm. It's that small.
Yeah. No, I mean, think about it in terms of the brand and people's psyche and they understanding silver, especially in the United States. You know, if you have a situation where the currency's going real wrong, it's worth a lot more than 16 billion. I'll tell you that. I mean, it's ridiculous how much money could flow into it.
Right.
And, you know, I think there'll be much more retail ownership of precious metals if our education system wasn't so screwed up. About all this Keynesian nonsense.
That's by design. I mean, to make people really stupid so they can go and get usurious rates on their credit cards and enjoy paying through the eye for the rest of their lives.
I mean, imagine if you're got into the stock market after the last crash. I mean, if you just invested in indices, you probably would have compounded 15% a year because of what, like the tech stocks and just this bubble has caused. So, I mean, there's less desire to acquire assets that don't yield anything, or even mining stocks because of the risk when you can get an easy, what I think is looked upon as a risk-free 10 to 15% rate of return in the stock market. I mean, that's how market participants are acting. Record level of investors after COVID, which is just
it's insane what happened. I mean, I looked at the S&P 500 the other day. It's 4,500. I mean, where do we think it could go to? I mean, given the fundamental factors, it looks to me like the Federal Reserve is propping it up because they know that the boomers, the median boomer, the one in the middle, doesn't have a lot saved for the retirement. So they got to keep that stock market juiced and keep them nominally propped up. And so it just seems that's exactly what they're going to do, just like they did at COVID. They came in, slammed it back up, and ran it back up. And I'm assuming that's what they'll do. But over the next decade, they're going to lose in real value to real things, precious metals like bullion, silver, gold, etc.
That's the only thing holding the social fabric together.
Yep. Exactly. That's exactly why they do it. It's a matter of national security, I think.
Right.
The New York Federal Reserve go in there and pump that thing up, and passive investing. That is exactly how they're doing it, I'm assuming. Okay, so I just wanted to speak to some of the work I did real quick. There's two things about this price of silver today in today's fiat Fed note US dollars that I've done. I've done videos, and I do it probably every quarter or every other quarter, which is just a price target using the basic amount of M0 base money that they keep jacking up every few weeks. The last one I did, the price of gold is near, and then the threshold that I'm using is very conservative. It's saying that we're going to hit a 40% threshold, which is time out. There's a car. I got trucks in my neighborhood. It says basically that we're going to have a repeat of history. So 1934. 1980 it blew beyond, like 100% beyond the M1 fiat currency at the time. So we could have gone back on a gold standard in 1980 theoretically. But I'm just saying, I'm assuming we're going to see like something like 1934, okay? And that's a 40% threshold. And at the price now, gold needs to be almost 10,000 fiat Fed notes per troy ounce at that basic conservative level. And I'm assuming whether politically we're going to get there or through some type of crisis in psychological factor with what they're doing in the system. When you do the math on it and you just assume a gold-silver ratio of 30, okay? That's very conservative because we hit 33 in 2011, and this is going to be uber crazier than that. You already got like a $323, silver price in today's fiat Fed notes. There's no telling what they're going to do in the coming years. If we go into another recession, how stupid it's going to get. And so you're sitting here looking at a $30 bullion piece that could 10 bag on you with very little counterparty risk. It's basically it's an option that just kind of sits somewhere hidden. It's a nice piece of insurance to have. It's not a stupid thing. And don't go all in, but obviously you have a prudent position to it. There's another chart that I often show people, and it's an interesting one as well. It's from Gold Charts R Us, Nick Lard's website. And it is I posted on my Twitter at James Henry And if you want to go look at it, guys, out in the chat. So if you go there and you see it, you'll see three lines. One is the top line, which is all the silver trading from 1970 to 2021 outside of New York COMEX silver futures trading hours. There's a middle line that shows you the spot price, what we're told the price of silver is. And then there's a line underneath that's very jagged and usually to the downside, and that is the intra New York COMEX trading hours. And you could see that the COMEX pit is essentially set up for, the big fish to crush little fish all day. And that's exactly why we have a suppressed silver price. But when you look on the outside of New York hours, they weren't trading that back in the day because the algorithms weren't doing what they needed to. Maybe today it doesn't apply, but it's when you go over 51 years, the damn data tells you, I think outside of New York hours, it's $233.08 per troy ounce today. So it's just another factor, another thing that you can look at. And that's 51 years of data. That's just not me like pulling that out of thin air. That's rolling data that tells you what the price of silver has traded for outside of COMEX New York's hours for 51 years. And so those are 2 points I wanted to throw in there. And moving along, Peter, what do you think? I see you nodding your head over there. You got some ideas?
It's bringing all kinds of
sure.
Things to mind. David and I have chatted about this before, and the fact that we see a lot more digital currencies. I should say central bank digital currencies are starting to roll out. I think it's Ethiopia or some African country has just announced that they've come out with theirs. This is happening. Oh, yeah. It's coming. And I think David agrees with me. We certainly see the, with a likely reset, precious metals having a role in backing some kind of digital currency. Before we even get there, I think that using digital currencies and replacing, what we currently have as currency is just going to make the whole thing explode in terms of quantities. And then if you have to back that with precious metals, then the sky really is the limit in terms of what the prices can be in those currencies for these metals. So, you just have to look at where things are headed and what seems, I don't know about likely, but has a reasonably high probability of happening. And again, the sky's the limit in terms of value. I think there's something else that people have missed out, and that's part of what David alluded to earlier about how so much of the game comes near the end. Is silver, the way what I like to phrase it is, it's a FOMO target, right? Fear of missing out. Mm-hmm. And so when people see gold go crazy, which it will, they're going to look for an alternative because they're going to say, well, gold's already gone up so much. It's whatever it might be at that point in time, $10,000 an ounce, and they'll look for an alternative. And silver is the obvious alternative. And at that point, it might be a couple $100 an ounce, and they might say, "Wow, that's cheap."
No doubt. Think of Ethereum versus Bitcoin. All of a sudden,
exactly.
Ethereum is massive, thousands of dollars. This is essentially the same idea.
That's right. Exactly. And at one point, I this goes back to last fall. I said, silver is likely to be the next Bitcoin. And Bitcoin itself is, has some chance. I don't think anybody really knows, but some chance of being topped in terms of performance sometime down the line. Not that anything else is going to be equivalent, but if Bitcoin gets topped by some kind of other digital currency, why can't we see silver, dramatically outperform gold even? And so I certainly think that's where things are heading.
So I was looking at the charts. I look at long-term charts all the time. S&P 500 is 4,500 right now. It takes about 187 ounces of silver to buy a share in the S&P. It bottomed in 1980. I know, Dave, ridiculous. It bottomed in 1980 at 20. A tube of silver could have gotten you a share of the S&P 500. And so there you go. You get 187 versus 20. If that's our future, something crazy like that, and that's a huge amount of gains you can get on the entire S&P 500. So, I mean, David, do you think that's even possible, again, to see it go back down to a tube of silver for the S&P 500?
Oh, I do.
Yeah.
I mean, there's so much fluff in the system right
Oh,
now.
yeah.
I mean, not to pick on Bill, we're pretty close. And he's right what he said. My point being is when the system collapses, that doesn't mean everything burns to the ground, but the businesses that are viable that will be able to continue because they haven't been over indebted, you'll have a new, debt load. And that debt load will be significantly less than it is now, meaning that some of stuff will just go to monetary heaven and never exist again.
Yep.
So under that condition, your repricing may be different than what it is in theory to pay off all the debt right now. I mean, all these debts. C.V. Myers, I read, was a book he wrote behind me, and he says all debt is paid off. Well, how can that be? But in a way, what he meant was that if you default, then the loan that was given to that business, that person, that government. Oh, wait a minute. You mean the governments borrow all the money that's in existence? Oh, yeah. Most people forget that. They go out of business. So there's a lot at stake here. Most people have no idea what's really going on. They think the government produces something. Well, they do. It's called misery. But outside of that, there isn't much that they do.
Hey, Bill, I know you got a hard stop pretty soon. So if you exit early, that's totally
I was going
fine.
to say, I've got to go, but I want to leave you with this. Fear is a greater emotion than greed. And where this is going, I don't think it's going to be fear of missing out. I think it's going to be just raw fear, which is going to drive capital toward the metals. And my standard answer now, when people ask me, how much should I have in gold? How much should I have in silver? I'm not talking about the percentage of the two, but my answer is whatever you don't want to lose, because gold and silver are the only two monies on the planet that do not have liability. Everything else has liability. And in a world that's bankrupting, that's not where you want to be. You want to be in a safe haven without liability. So guys, thanks for having me.
Yeah, thanks.
Got to jump.
Thanks for coming. Yep.
All right. Have a great day, guys.
Cheers, buddy. Good luck with you. Good luck.
Take care.
Thanks, Bill.
James, if I may just sort of chime in for a sec, you brought up that ratio of silver to the S&P back in 1980, and I actually have it in front of me. It was at 0.445, and so I did the math, and if you were to figure out if we were to have a repeat of that today, silver would be up somewhere around, I believe it said $1,958. Yeah. So there's a lot of upside at this point.
In mania's the upside. It gets as dumb as the suppression and how humiliating as the absolute crimes that have gone on in this market this past decade, 2010s, and in our face, in front of everybody. As bad as that's been, is as crazy and as good as it could get on the other side of it. So that's what and in a condensed time frame, like take all that pain and shove it into euphoria on the up. Chris, what do you think of that? I like the smile on your face. I think you like that idea.
Yeah, and also thinking, we never know what can happen if you play the same monetary value or demand for silver as you do to gold during a mania, silver could theoretically, surpass the price of gold.
Yeah, no, there's people who talked about that.
Absolutely not.
Yeah. If government says gold bullion is too important for our monetary system for you to even use, all of a sudden silver is the only thing you can run to. I mean, a scenario like that is something that is not out of the question.
I have to chime in real briefly, James. Mm-hmm. One of my first visits, actually, Mike Maloney and I both did a speech in Singapore, and they had hats that they were giving out.
I remember that.
silver the next gold. And what they meant was exactly that when you're not allowed to own gold for whatever reason, the only place to go is silver. And at that point, and I just got another thought I have to put in. If you go to Gold Eagle, I think it's gold-eagle.com, and type in gold is the road to fiat. I think that's it. The gentleman, and I don't know how to pronounce his name, it's like TJADA or something, but he wrote 3 articles on a gold-only standard is one step to fiat. That in order to have a really honest monetary system, you have to have silver in the equation. And without it, you're going to go to a gold-only standard. And once you go to a gold-only standard, you go to a fiat standard. And once you go to fiat standard, you have a financial problem. And it's a very well thought out article. He goes back into the 16th century or so and builds his argument. So for those silver buffs out there that want to investigate a little bit, and the other point of that series of articles is that you cannot have a fixed ratio. The market must determine what is the right amount of silver to gold, which would vary. Right. And of course, that's why we got in the opium wars and everything else. And I don't want to go too far down a rabbit hole.
No, but that's a fact. If you fix it, there's going to be real problems.
Yeah. It's, to your point, David, that's exactly what the U.S. did. We were founded on a silver standard. Then we went on a bimetallic standard, but we fixed the silver price to gold. So then when the gold rush happened, money started, Gresham's law went into effect, and good money or bad money chased out good, meaning overvalued money chased out cheap money. Silver was hoarded internationally, and they were forced to, well, not forced, they planned it had to be a gold only standard. And then we slowly went to fiat.
So obviously CBDCs are coming. The fiat CBDC grid is coming. That's a huge thing. And one thing about silver bullion, obviously we know the upside could get really silly. We don't know how silly it could get because it's just one of the last places you can go that'll literally not be digital outside of everything. And obviously in a situation where cash is no longer even used, except for maybe small little dollars and 5s and 10s for occasional bus rides or what have you, you may end up having a situation where, this is one thing I suggested, is that bullion may go black market essentially, where, all of a sudden Mexican cartels, you name it, any type of black market operations are going to be running bullion as well. And it's, if you've ever seen the Hollywood movie Loopers, they got a few things wrong on that. They had like yuan Chinese cash notes by 2074. There's not a chance there's going to be a yuan cash note. I mean, that might be by 2024. But the truth, the best point they had is that gold and silver were so damn precious that they were only used in absolutely like high level black market crime. And then gold was only used for your long-term retirement if you wanted to stay off the grid. So anyways, I wanted to drop that out there. Hollywood did have some insights in that movie that were pretty funny. And this is a movie from like 2011 or 2012. It's a violent action movie. So, all right. Well, you guys, obviously we know that silver is undervalued at the moment. And I really want to thank you for being in here and coming on. And thanks to everybody behind the scenes here at Silverfest too. It's always excellent to be here. So can you give your website, Peter Krauth, to those that were listening?
Yeah, so that's still silverstockinvestor.com and also goldresourceinvestor.com.
Chris Marchese, how do they find you, buddy?
Goldseek.com or silverseek.com.
Great.
Either one.
And David Morgan, the silver guru.
TheMorganReport.com.
Great. And I'm James Anderson, sdboying.com. You can find my Twitter handle at James Henry, and that's probably the easiest way.
I just wanted to pop on really quick and say, wow, you guys, what a great panel. And it was great to be able to listen while I was getting people lined up for the next one. But thank you all for being here, and you're all awesome. And we're going to end now and get the next stream started. But if you guys want to pop into any of the booths and chat with people, I'm sure everybody's got questions for you guys. So hit up those expo booths and let me know where you are, and I can broadcast it on the event chat. Okay?
All right.
Thanks,
All right.
Eric.
So much, everyone. We'll see you all in a minute.
Ciao.
Ciao.
Cheers.
Well, thank you so much for everyone involved with that panel and everyone at home watching. Sure do appreciate you as well. And a quick note before we wrap up here, because as you may know, there's a company called BlackRock that I'm not such a big fan of. And some of you may be familiar or may have heard this call where last year I called BlackRock, which owns iShares, the fraudulent silver trust that does business with its partners, Goldman Sachs and JP Morgan. And I asked how, or actually here, you can hear for yourself.
Sorry for that hold. Yeah, just to confirm, so you're looking for performance information around the silver ETF?
I guess you could say that, although more specifically, I'm confused of how the price of silver came down 10% when you guys claim to have added a historical amount of metal on February 2nd.
Now, while I have not heard back from BlackRock, the financial fraudulent firm yet, let's at least point out that just because there's BlackRock in the name, be careful, because fortunately, we do have BlackRock Silver, which is a much different entity, because unlike the BlackRock that runs iShares SLV, which is full of fraud, Andrew Pollard, who runs BlackRock Silver Corporation, a much different entity, because they're actually going out, they've located silver, eventually be digging out of the ground if all goes according to plan. But just before we wrap up, I mentioned BlackRock because they are one of the sponsors that brings you the show each time, and certainly not legal financial advice. But we did have Dave Kranzler of Investment Research Dynamics on a while back, sharing a few thoughts of his own on BlackRock Silver, which I'll play about 30 seconds of now.
Our show, which is BlackRock Silver, which I know you have covered, and I will add they do support the show and help bring everybody these episodes, although Dave, you do not have any financial incentive you receive from them. Is that correct?
That's correct. I mean, it's one of the largest positions in my fund right now. And I think it's got a project that potentially means 5 to 10 times more upside from where the stock is trading now. You know, again, it's not guaranteed, but in my opinion, it smells like that could be the case.
Well, I appreciate that. And by all means, folks at home,
so there you go. Just some thoughts from Dave Kranzler. Although if you'd like to hear more about BlackRock from Andrew Pollard, the man who runs it, fortunately, he's a lot easier to get on camera than Larry Fink or the other BlackRock, but it's coming your way now.